This video is going to show you how you can build massive wealth from real estate investing. You're going to learn the strategy to use in 2025 and beyond so you can level up in a big way. However, it's not for everyone. I'll show you the good and the bad so you can decide for yourself if you have the motivation and what it takes to be successful. The traditional investing approach is pretty straightforward. You find a property, you rent out your property, that tenant pays rent to cover your expenses, effectively paying off your mortgage. Over a long time horizon, your property appreciates, building wealth. This is a great approach if you have decades of time and want to live the same life you have now. But if you want to completely transform your finances through real estate, please don't make the mistake of thinking this is the way that you're going to get there. I'm going to show you the real way to build wealth in just a few years, and it has nothing to do with single-family homes. So let's dig in. Let's start with an example of how not to do this, okay? And note, this first part was taken almost verbatim from another very popular YouTube video. So an example, you have $30,000 to invest. You use that as a down payment on a $300,000 rental property with a 30-year fixed mortgage at, with today's interest rate, 7% interest rate. So your mortgage payment, principal and interest, that's going to be $1,587 per month. Property taxes are about $400 a month, and insurance is going to be, I don't know, around $250 a month. So total monthly expenses is $2,237. Okay, so if you can rent the property out for $2,237 per month or more, after 30 years, the mortgage will be paid off. If the property appreciates 4% annually, it'll be worth $973,000 in 30 years. Essentially, your $30,000 investment grows to $973,000, achieving about a 12% annual return due to leverage. Wrong. So wrong. Let me tell you why, okay? First, property management. Unless you want to deal with the headaches and disasters that eventually come with managing real estate, you will want to hire a property manager. Typical cost for a single-family home is around 8% of gross rent. So to break even now, you'll need to get $2,433 in rent per month. But wait, there's more. Let's not forget about maintenance. If you've owned a home before, you know that things break and they require upkeep. So let's conservatively set aside, call it 5% of rents for maintenance. And by the way, this is typically not enough, but it illustrates the point. So now we're setting that aside. So you're going to need $2,575 for rent to break even. But wait, there's also more. If we're talking about holding this thing for long term, we will also need to do some larger repairs to the home. These are called capital expenditures, CapEx for short. These include replacing the roof, the furnace, flooring, windows, etc. I'll put up a chart here to show all the categories and estimated costs. Now, mind you, these numbers are pulled from a popular real estate book that was published a few years ago, so actual costs today are quite a bit higher, and they're going to be higher in the future. But we can go with these for now. So with this, we need to save an additional $182.75 per month to cover these future costs. So now we need to get $2,782 per month in rent just to break even. We get no cash flow from this property at this point. So fine, we somehow find a tenant that pays us almost $2,800 a month to live in an area where homes are available to buy for $300,000. I don't know what magical land that is, but fine. So now that tenant moves out, let's say, after a year or even 3 years, whatever it is. The property is going to sit vacant for a couple of weeks, maybe a month. Now, because you had to cover the mortgage, tax, insurance, you have negative cash flow of $2,237 at a minimum for that 1 month that it sits vacant. Remember, most property managers will charge you a one-time fee to place a new tenant. Also, you'll be responsible for basic utilities while the property sits vacant. The maintenance money you set aside will have to be used to get the property rent ready again, and the cycle continues. Wow, what a wealth building strategy. Amazing. Okay, sorry about that. Now, how can you avoid this hellscape? Well, by doing something that hundreds of people just like you and I do across the country every year, every day. They buy apartment buildings. Okay, wait, how do I do that? Well, in the link in the description of this video, I put together a free guide to show you. Check it out. But for now, I'll walk you through the process. Step one is just to educate yourself how to properly identify a good deal. This involves spreadsheets and software, both of which are really easy to use. And I have a free course that teaches you exactly how to do that. Again, link in the description. But anyway, step two, identify a good market in which to invest. To do this, you're going to look at population growth, income growth, median home values, crime indexes, job growth, and rent growth, for starters. You'll want to pick a few markets in the country that you think you might want to invest in and run these numbers and compare them side by side to see on an overall basis which market is the most attractive based on these metrics. So after you've picked your location, step three is to find and recruit a property manager. Your property manager is one of your most important relationships. I have a full list of interview questions you'll want to get answered for free, which again, check out the description in my video for access. Step four is to get connected. And by this, I mean with other investors and real estate folks in the area that you want to be in. These include lenders, other investors, as I mentioned, both passive and active, real estate brokers, and again, property managers. In really good markets, there's an ecosystem of actively involved participants, and this is not a solopreneur endeavor. It does require a team, and so the more folks you network, the more opportunities you'll find to partner with folks and uncover deals. Speaking of passive investors, step 5 is to start building those relationships as well. You're going to want to just start getting out there and letting people know what it is you're doing, get them excited about it, and share with them the strategy of what types of property you're ultimately looking to invest in. The really good way to do this is just with like a sample deal. You can put together in like PowerPoint or a PDF, depending on how you're sharing it with folks. But you just outline, what types of projects you're looking to invest in, what types of returns you're targeting, and then ask them, is this something you'd be interested in investing once we get a deal under contract? You have to have a lot of these conversations and start building a database, or by database, I just mean a spreadsheet, can be as simple as that, of folks that you've spoken with and the amount of capital they've suggested they might put into a deal like this. You're going to want to have a lot of these names, because when it comes time to close your deal, you do not want to fall short. You want to make sure you have more than enough capital to go in the deal so that there's ideally a waiting list to get in. Step 6 ties back to the networking step. Another key team member is actually on the legal side. You're going to want to get an attorney, specifically an SEC attorney that has experience drawing up documents for real estate syndication deals. Since this is a pretty technical step and a very important step to make sure that you don't break any laws, you're going to want to rely on this person to draft your legal documents. You'll also be getting an LLC, a private placement memorandum, and a few other documents in place, all through this attorney. Okay, and then the next step after this is just to start making offers on properties that you think might be a good deal. You'll do this by what's called an LOI, or letter of intent. A broker calls you, or you call a broker, you find the listing, you do your analysis, you determine that this would be a good deal for your investors. You get back to the broker with an informal offer saying, hey, I'm looking at around this price. Is that something that I should put in writing? If they invite you to do so, that means that you're in the running to win the deal. At that point, you'll want to just start reaching out to investors as well and saying, hey, we might be getting a deal under contract. So, let me know if you're interested in this one. It looks pretty exciting, or, tell them a little bit about it, but nothing specific. Then if you do get a deal under contract through a purchase and sale agreement, that's when you start hit the ground running. You'll have a lot of due diligence to do and a lot of activity from that day until closing. Not only will you have to get your investors on board and get capital, you'll be working with your attorney to form the LLC and all the different documents that's going to own that entity. You're going to be speaking with your lender, which you've already been doing at this point, about the deal and getting terms for financing and locking those in. You'll be working with your property manager to do all your due diligence of the site itself and doing walkthroughs of all the units, having inspections done, all of those steps that need to be completed to verify what you believe you're getting. At this point, you're really going to want to solidify what your plan of action is on day one that you start taking over management of the property so you can hit the ground running. Go through all these steps and you close successfully. Congratulations. You are now an owner of a large apartment complex, and you're ready to do it again and again and again. That's how people are building multi-million dollar real estate portfolios in a fairly short amount of time. You don't have to be an expert. You don't have to be part of some magic special club. You just have to be willing to understand all this stuff and then just do the work involved. It can be very boring and very tedious at times. And I felt those exact same things before. You just have to keep going. And then once you get that first deal, the next one is 100 times easier. And the next one after that's 100 times easier again. So stick with it, and you can be successful. Before I go, I just wanted to remind you to click the link in the description for my free guide that outlines all of these steps for you, and hope you find that useful. And make sure you like and subscribe to the channel. I'll be uploading more videos like this every week. Thanks.